Have you ever considered how some investment options might offer a shield against the erosive power of rising prices, helping your capital maintain its purchasing power? Alternative investments often provide a robust hedge against inflation, primarily because many are tied to real assets or possess unique characteristics that allow them to perform well in inflationary environments. Unlike traditional stocks and bonds, which can be vulnerable to inflation's effects, alternatives like real estate, commodities, and infrastructure assets tend to correlate positively with inflationary trends, helping to preserve value. The core mechanism behind this hedging capability stems from their direct relationship with underlying economic realities. Real assets such as commercial properties often see their values and rental incomes adjust upwards with general price levels, reflecting increased replacement costs and higher demand. Commodities, being raw materials, are often the very components whose rising prices contribute to inflation, making them a direct hedge. Infrastructure assets typically feature long-term contracts with explicit inflation escalators, ensuring their revenues keep pace with economic changes. Furthermore, certain hedge fund strategies can actively navigate and profit from inflationary pressures through flexible mandates that allow them to invest across various asset classes and employ sophisticated hedging techniques. To practically assess this, investors should examine the specific characteristics of each alternative asset class. For instance, look for real estate investments with short lease durations or inflation-indexed clauses in their contracts. In commodities, focus on physical assets or futures contracts that track essential raw materials. For infrastructure, verify that revenue streams are directly linked to inflation through contractual agreements. In private markets, understanding whether companies have pricing power to pass on increased costs to consumers is crucial. A key concept here is the real asset characteristic, which signifies tangible property with intrinsic value, distinct from financial instruments. This tangibility, coupled with the potential for direct indexing or contractual links to inflation, means that as the cost of living and production rises, so too do the values and cash flows associated with these investments. This offers a compelling diversification benefit, protecting a portfolio from the adverse effects of an unexpected surge in inflation. Ultimately, integrating alternative investments with intrinsic inflation hedging properties into a diversified portfolio can serve as a strategic defense mechanism, helping to safeguard long-term capital against the depreciation caused by inflation. By understanding the specific mechanisms through which each alternative asset class reacts to rising prices, investors can make more informed decisions about how to maintain their real wealth over time.